Welcome to Aspero Fixed Income Academy. Types of bonds. As we learned before, bonds are investment instruments through which different entities raise debt from retail and institutional investors directly for a specific purpose and in return pay them a fixed periodic interest and repay their principal at the time of maturity. But did you know that there are different types of bonds? Let's take a closer look. First, there are government bonds. These are issued by governments, usually with the purpose of financing public spending. They are considered to be very safe investments as governments are unlikely to default on their debt. SGBs or sovereign gold bonds that you may have heard of fall under this category. Next, there are corporate bonds. These are issued by corporations and the return you receive is based on the creditworthiness of the company. Generally, the higher the credit rating, the lower the yield and lower the risk of default. Then there are municipal bonds. These are issued by local governments or municipalities, and the income generated from them is tax-free in most cases. They are generally considered to be lower risk than corporate bonds, but higher risk than the government bonds. Finally, there are high-yield bonds, also known as junk bonds. These are issued by companies with a lower credit rating and are considered to be higher risk, but they offer a higher return in exchange. So there you have it. Different types of investment bonds with different levels of risk and reward. It's important to do your research and consider your risk tolerance before investing in any type.